Hello everybody, this is Lara from Pure Elliott Wave with an updated analysis for Ethereum with you on Saturday the 24th of June 2023. It looks like Ethereum might have begun its next third wave up. It could be at 4 large degrees. I'll have a look at that on my daily chart. I was expecting that last bear market, a little pullback, to be a bit deeper. It was relatively brief and shallow, but I have an explanation for that possibly. I'm expecting the next bull run may have begun and my short-term target is at 6131. Let's take a look at the analysis. Actually, before I get into the analysis, I just want to remind you that I'm presenting on Tuesday at 2 p.m. with the Elliott Wave Hub forecasting event. You will see my Bitcoin wave count, and I'll also cover Ethereum and XRP. I'm going to focus on how do we use Elliott Wave for cryptocurrencies? What are the quirks of these markets? And I'm also going to focus on using classic technical analysis in conjunction with Elliott Wave to identify sustainable highs and sustainable lows for crypto, because that's what we want, right? We want to find out, has price found a low? Do we need to buy when prices are low? And then eventually we also need to figure out, has price found a high? We need to sell when prices are high, because, well, that's how you make money, right? So I'm going to look at that. So click on the link below and see me at 2 p.m. at the Elliott Wave Hub forecasting event. I also just want to remind you that I analyze Bitcoin every Monday. If you're asking me where's my latest Bitcoin analysis, it's here on my website. Every Monday I'm analyzing it for you. That analysis of Bitcoin every Monday is a subscription on my website. It's incredibly reasonably priced. So if you want expert, reliable, regular analysis every Monday of Bitcoin, you can get it on my website. This monthly chart of Ethereum, a candlestick chart, shows the entire price history of Ethereum from this low to this high. There's a really good looking 5-wave impulse. Primary 1 an impulse, primary 2 a double zigzag, primary 3 an impulse is 19.36 times the length of primary 1. That's not a Fibonacci ratio. I'm just noting how long those waves are because it's important for target calculation for the future. Primary wave 4 was a regular contracting triangle, beautiful alternation between a double zigzag here and a triangle here, and really nice proportion. And primary 5, it looks shorter than primary 3, but it's actually longer because of the scale of this chart, a semi-log scale. Primary 5 was $81.51, longer than 2.618 times the length of primary 3. Now this isn't as long as fifth waves of cryptocurrencies can be, but it is definitely longer than primary 3. So it moved more than 2.618 the length of primary 3, and it did it in just 3 months. So this was the longest and strongest portion of upward movement. That's a feature very typical of cryptocurrencies. After this bull market, which I've labelled cycle 1, there was a big bear market that lasted over a year. It's cycle wave 2. It's a 94% correction of cycle wave 1. So again, you can't see how deep it is because of the scale of the chart, but this is a very, very deep bear market. When 2 ends, 3 begins. Cycle 3 may only subdivide as an impulse from this low to this high. Primary 1 may be complete, and primary 2 is very likely to be over here. It's an 83% correction of primary wave 1. Now this isn't as deep as cryptocurrencies very commonly are, but Ethereum tends to not be quite as deep in its bear markets and not as long in its bull markets. A little bit less, well, it's still incredibly volatile, but not as insanely volatile as most other cryptocurrencies. If primary 2 wasn't over here and were to continue further, it may not move beyond the start of 1 below 82.05, but it's extremely likely at this point that primary 2 is over here, because were it to continue longer, it would now be longer in duration than cycle 2 1 degree higher. That would give the wave count a disproportionate look, and it's the proportion between the corrections that give wave counts the right look. Mostly the proportion between fourth and second waves in an impulse, but also between corrections of differing degrees. Lower degrees usually, not always, they don't have to, but usually are more brief than higher degrees. For cryptocurrencies, I just said something about that proportion. It's absolutely fine to see a fourth wave, which is more brief and shallow than its counterpart second wave. I'm so sorry, the exception to that statement is when fourth waves are triangles. Triangles are really time consuming. They take up time, they move price sideways, that's their purpose. But if it's not a triangle, the fourth wave is usually or often more brief and shallow than the second wave, and that's because the strength of a fifth wave pulls the fourth wave up to be more brief and shallow. Like this fifth wave, very, very strong, covers a great distance in a short period of time with an almost vertical upward slope. It's pulled primary wave 4 up a little, but here intermediate wave 5 has also pulled intermediate wave 4 up a little, made it more brief and shallow. Now that's most common in fourth waves within a third wave 1 degree higher, not so much within a first wave 1 degree higher as these two examples in this chart are. Okay, let's go and look at the weekly chart. We're going to have a look from the low of primary 2 over here. This point down here, here's the double zigzag structure of primary 2, has a beautiful fit. Ethereum does tend to have pretty good looking Elliott waves. First zigzag in the double, intermediate W, double joined by a 3 in the opposite direction. Second zigzag in the double, intermediate Y. If 2 is over there, 3 has begun. Now I am considering moving the degree of labelling here up 1 degree. It's possible that this could be intermediate 1, 2 and minor 1, 2. For now, I'll leave it as is, but I am considering that, and I might do that before the Elliott Wave Hub event on Tuesday. I might adjust this wave count in that manner. If I do move it up 1 degree, then this move is going to be minor 3 within intermediate 3 within primary 3 within cycle 3. That's minor intermediate primary cycle. That's a third wave at 4 big degrees. Well, minor not so big, but intermediate, primary and cycle are all big degrees. A big third wave at 4 degrees could have forced this correction to be more brief and shallow. When you get toward the middle of a third wave and you have all these overlapping first and second waves, the strong upward pull of the strength of that third wave can force the corrections that come just before it to be a bit more brief and shallow. And so I am considering changing that degree. For now, I'll leave it as minor 1, 2, minute 1, 2, within intermediate 1. If this degree of labelling is correct, then eventually intermediate 2 will arrive and it can't move beyond the start of 1, below this price point back here. But for now, within minor 3, minute 2, if it continues, can't move beyond the start of 1, below 1074.40. There's a best fit channel around this bear market from this high to this high and a copy down on this low, so it contains all of this movement except the overshoot at the end of this bear market. This channel is very confidently breached now by upward movement on the weekly chart, and a pullback to test support has fallen substantially short of the upper edge of that channel, but we've got some strength here in this last completed week, and this is a morning doji star telling us that this downward movement may well be over now. My possible target for primary 3 is for it to reach extreme Fibonacci ratio, 11.09 times the length of primary 1 at 54.226. Looking back at the behaviour of the third waves within cycle wave 1, this looks like quite a reasonable target for Ethereum. Let's take a look at the daily chart. Let's go from the high of minute 1 here. We could be looking at the start of minor 3 within intermediate 3 within primary 3 within cycle 3. Remember, we could have those multiple big third waves in a very early stage. Either way, end of a first wave here, end of a second wave zigzag, subdivides beautifully, 5-wave impulse for minuet A, running contracting triangle for minuet B, really nice looking 5-wave impulse for C. This also has a beautiful subdivision. I just checked my labelling here on the hourly chart. The high on this candlestick comes before the low on this candlestick, so this impulse, this is how I'd label it, 1, 2, 1, 2, 3, 4, 3, 4, 5. Triangle over here, impulse over here. So there's a zigzag over here that could be the end of the second wave correction, whether it be minute or minor degree, ending just a little bit below the logarithmic function of the 0.382 Fibonacci ratio, which is calculated at 1644.15. I make a distinction between the correct arithmetic Fibonacci ratio and the logarithmic function of it. So we've had a logarithmic function applied to the 0.382 ratio here. It's important to make this distinction. MotiveWave will do that calculation for me when I view the charts on a semi-log scale. And I just jumped off and checked, yes, this is a semi-log scale. It's important to be accurate with this. If this is where second wave is over here, then whether it be at minute or minor degree, as I've outlined, a reasonable target would be for the third wave to reach 4.236, the length of the first wave, at 6131. Now, considering how long the third waves of cryptocurrencies can be, this is a pretty conservative chart target. But I would expect for a big third wave, I'd be looking for the fifth waves of the ends, at the ends of those third waves, particularly intermediate, primary, and especially cycle. I'd be looking at those fifth waves to be the longest, strongest upward movement over in the shortest amount of time. And so this would be a reasonable target for the next third wave up. It won't move in a straight line. Don't expect price to do that. It'll be a 5-wave impulse. 1, pullback for 2, 3, pullback for 4, 5. 2 could be deep. Just because this 2 might have been shallow doesn't mean this one also has to be. When this first wave is over and we can draw a channel around it and the channel is breached by downward movement, then draw a Fibonacci retracement along the length of it, apply the logarithmic function, look out for the second wave to reach the 0.382 or 0.618 logarithmic functions of the Fibonacci ratios. Minuet 2 may not move beyond the start of 1 below 1622.92. This wave count's extremely bullish. People are often coming into my comments and asking me, I'm going to go back to the monthly chart for this. They're asking me, Lara, your targets are too extreme. That will mean a huge increase in market capitalization. It's not possible. Where is the money going to come from? And my response is, you could have said exactly the same thing back here in 2015, back when Ethereum was under $1.50, and yet it reached over 4,891 up here at its all-time high. So it went from under $1.50 to over 4,800. The market capitalization absolutely went on an exponential increase. That's what these markets do, and I'm expecting them to do again. It's happened before. It's absolutely possible it's going to happen again. I'm not going to pretend to even guess where the money's going to come from. All I know is it's happened repeatedly in the past. So to say it can't happen again would be ignoring the lessons we can learn from the past. And to be honest, I don't really understand. No, I understand where you're coming from. I just don't understand why you can't acknowledge that if it's happened before repeatedly in repeated markets as they increase exponentially, it can absolutely certainly happen again. So just have to acknowledge that that's absolutely possible. Okay, let's move on. If we move the degree of labeling in this zigzag down 1 degree, then it's possible to see that this pullback or short-term bear market for the second wave may be incomplete. It could be continuing as a flat, double zigzag or combination. I'm just going to go over a flat on this chart. I'm not going to give you 3 charts for the 3 different structures. A flat is a pretty common structure. Double zigzag it could also be. That's also pretty common. Within a flat, wave A subdivides as a 3, wave B also must subdivide as a 3, an Elliott wave corrective structure, and then C subdivides as a 5. Within a flat, there is a minimum requirement for the length of B. It has to retrace a 90% the length of A. In this instance, that means upward movement must reach 2087.14. There is a common range for a B wave within a flat from 1 to 1.38 times the length of A. That should be an X, not a C, sorry, typo. That gives us a common range for minuet B from 2138.72 to 2334.72. The most common type of flat is an expanded flat where B does move beyond the start of A. It's a 1.05 length or longer of A. And then within an expanded flat, C moves substantially beyond the end of A. There is no rule stating a limit for wave B within a flat, but there is a convention within Elliott wave that says when your B wave is 2 times the length of wave A, discard the wave count. That would be achieved at 2654.52. Let's use some classic technical analysis tools and techniques to identify which of those 2 daily charts looks most likely at this stage. Here's a big bear market down to the low in June 2022. It came with RSI reaching oversold. It's only done that once before in Ethereum's price history, and that was corresponding with a sustained low that's been sustained to this date. So this is actually very bullish. There's no bullish divergence here, but RSI did reach oversold. As we move up off the low, making new highs, at this high here, a bearish engulfing pattern, so no surprises, we got some downward movement. Looks like support may be holding at 1750, and there's a morning star candlestick reversal pattern forming after this little pullback. This supports the view that this low may be sustained. On balance, volume is within a narrow range. ADX tells us there's no clear trend. Price has found support. Stochastics isn't oversold though, but it might turn up here around about the midline. Because price is at support, it's 1750, and we've got this bullish reversal pattern. I expect it's more likely than not that this may be sustained. And the third weekly candlestick, the bullish one, does have a little bit of a push from volume. As price is moving higher, volume is overall declining. As price is moving lower, volume is overall flat. So volume isn't yet supporting upward movement as price moved up off this low. It did support this movement up to here, a little bit of support here, and there was strong volume in this upward week here. But as we moved higher, volume was overall declining. So for the start of a third wave with a cryptocurrency, that's actually quite possible. Really annoyingly, their lows are really hard to find because they can be really weak off their lows. They save their energy and strength for the middle and the end of their third waves. These are so difficult to find the lows for. A little easier to find the highs, although that's not easy either. On balance, volume within a range. We've been over the rest of these, and ATR declining as price falls and continuing to decline as price moves sideways. When we look under the hood and we look in the daily chart, we do see a little bit of a push from volume as price is starting to move up here. We saw it before here in this bullish movement. Within this bearish movement though, we do not see volume pushing price higher. So that's changed. This is new. This is different for this upward movement. That, in conjunction with a little bit of weak bullish divergence between price and money flow, I would almost want to say this is a morning star, but the star is just so not detached. But this is a pretty good bullish candlestick here, but perhaps not a bullish reversal pattern. There's also a bullish signal from on balance volume, so I'm seeing a little bit of evidence on the weekly chart, a little bit more on the daily chart to suggest that this low could actually be sustained despite this pullback being more brief and shallow than I was expecting. It could have been over back down here. ADX is currently declining at both time frames. There's no clear trend. At this time frame, stochastics is overbought, but price isn't near resist. Well, it's getting near to resistance about the round number pivot of 2000. There's another bit of resistance I should put on here about 2150. Stochastics is only just overbought, so there is still room for upward movement before price turns around and moves into the next pullback. That's it from me today with an Ethereum update for you. I really hope to see you on Tuesday at 2 p.m. at the FX Traders Edge Elliott Wave forecasting event. I'll be again going over Bitcoin, Ethereum and XRP, so if you want to see my Bitcoin count, that's how you can get it for free. Otherwise, you can subscribe on my website and get it every Monday reliably. That's the advantage of paying someone a subscription. It means I have to do it for you, and I will reliably do it every single Monday, text, charts and video. Okay, thanks guys, and thanks for your support. I hope everyone's having an awesome weekend.